This morning's crude oil trading, we'll take a quick look. We haven't checked it much this morning, but it has been able to hold 70 and, in fact, 75. It's 78 and change. In yesterday's session, WTI saw its highest close in 3 months. Both WTI and Brent settled above their 200-day moving averages for the first time in close to a year. Later this week, we're going to get quarterly results from ExxonMobil and Chevron. And joining us now to talk about all this, Rebecca Babin, CIBC Private Wealth Senior Energy Trader. Is it as simple as everything else we've been talking about today, Rebecca? No recession, soft landing, demand stays strong?
So I wish it were that simple. That's certainly an important part of the equation for crude oil right now. But there's a whole other side of the equation which is equally important, and that's the supply side. And what's working for crude, or has been working for crude over the last several weeks, is we've had supply come off the market. We've had Russia start to actually make good on the promises of cutting their production. We've had Saudi Arabia's 1 million barrel voluntary cut actually start to ripple through and materialize in the market. And we've had U.S. production, which has been really strong for the first half of the year, start to decelerate. I mean, rig count is down 15% year over year. It's an important number. And U.S. production is now going to start to kind of moderate. And we really need that supply side of the equation just as much of this as the demand side to hold true for crude to continue to rally. So two parts to that answer, I guess.
Rebecca, long term, what are we using? What's the global usage of oil? How many million barrels per day is it right now? And where will it be next year and in the year after? I'm just wondering how you calculate these things for your forecasts.
Yeah, so right now, global oil demand is around 101 million barrels. And it is expected this year, the growth is expected to be 1.6 to 2 million barrels over last year. Next year, growth is expected to moderate a little bit because obviously the China reopened trade isn't going to be as pronounced. However, global growth is expected, now this is consensus number, there's a wide range around here, to increase by another million barrels. So we're looking at 102, 102 and a half. Kind of that's the range we're looking at for global oil demand. And even though we're slowing in terms of that rate of growth, there is expected to be continued growth in oil demand well into, the late 2020s. And where it peaks out is the topic du jour of where does it start to, peter off? Does it happen in 2030? Does it happen in 2035? And that's an important conversation, just as these big oil companies have to make these long-term investments. So right now we're over 100 million barrels a day of demand, and it's going to accelerate this year and into next.
And then it's even harder to go out 5 years, I guess. But when the OPEC Secretary General said 105, people said, well, he's talking his book. But we'll probably will get to 105 at some point, won't we, in the future?
I think that's very possible. I don't think he's necessarily being over optimistic or talking his book to a large extent there. I think most people think that's a reasonable number. Again, that really depends on what happens with the energy transition, right? How quickly this uptake of EVs starts to take hold. The numbers are obviously improving tremendously.
How do we power them? How do we power them, Rebecca? I hope the wind keeps blowing, but we do need a grid. It all points back to either natural gas or some type of hydrocarbon.
I don't disagree. I think natural gas is going to play a huge role in that. And I think that's part of the story as well. The transition is obviously underway and going to dampen the growth of fossil fuels. It doesn't necessarily eliminate it. Yep. And I think that's why you're seeing the majors, if you look at Chevron and Exxon, they're looking at, energy transition adjacent projects. They're not necessarily saying we're going to go into wind and solar. They're saying we're going to go into lithium mining. We're going to go into carbon capture, right? We're not necessarily saying this fossil fuel story is over. We're going to learn how to use our technology to mitigate emissions or develop different technologies that are part of the transition.
We haven't moved the needle. We really haven't moved the needle. That Jeff Curry, one of your colleagues or another person in the business, 82%. Of worldwide energy is still hydrocarbons, and $5 trillion ago and 15 years ago it was 82%. We're still 82%.
Those are real numbers, and he's right. And it's just not going to be as quick or as easy as anyone thought or hopes for. And I think that's why I think when I look at energy equities and at crude oil, it really is a sustained story over the next 3 to 5 years of strength.
I mean,
we've had this of investment,
Rebecca,
right? There's little money going there, and it's going to do well.
Can I have 81.2? Can I have just something below it? So, I mean, that's a big leap of faith to think that we're really going to do it in 10 years. Big leap of faith. So I hope Exxon and Chevron don't blow all their money on the adjacent things. I hope they do some of the things that they're good at as well.
I don't think they are abandoning ship on that. I think they will. I think what they're thinking about is how they somewhat diversify and capture the bigger and growing opportunities.